California insurance market is in crisis, and it's hitting homeowners from every angle. Rates are climbing, coverage is getting harder to find, and longtime carriers are walking away from the state altogether. Whether you're renewing your policy, buying your first home, or moving here from out of state, the rules of the game have changed, and knowing your option has never been more important. Today, we're going to break this down from start to finish, why we're in this crisis, the difference between emitted and non-emitted carriers, how the California Fair Plan fits in, what's changing to try to fix these things, and what you can do right now to protect your home and your budget. Hey guys, welcome back to another episode of Rooted in Redding. I'm Faith Barrett, your local guide to everything here in Redding, California. If you're new to the channel, don't forget to hit that subscribe button, like this video, and comment your thoughts below as we share weekly videos about Redding and the housing market as a whole. All right, let's start with how did we get here? Now, this didn't happen overnight. California has always been wildfire prone, but in the last decade, wildfire season has become longer, hotter, and definitely more destructive. We've had multi-billion-dollar loss years back to back, and earlier this year, the LA fire alone created over $4 billion in losses. Here's the problem. Number one, high wildfire risk means more claims more often. Number two, rising construction costs due to inflation and supply chain issues. This makes each claim even more expensive. Number three is reinsurance costs. The insurance that protects insurance companies have soared. And number four is regulatory delays in California means insurers can't raise rates quickly enough to keep up with these rising costs. So the state's process can take 6 months or more, and historically hasn't let companies price based on actual reinsurance costs or forward-looking wildfire models. So you put all of this together and you have major carriers like State Farm, Allstate, Geico, and all these others start pulling back, and they basically stop with new policies in high-risk areas, they don't renew anymore, or they just leave the state entirely. So what's left is a smaller pool of insurers, high premiums, and really fewer options. Now, let's talk about emitted versus non-emitted carriers. An emitted carrier is licensed and regulated by the California Department of Insurance, and they must follow strict rules for rates and claims handling, and if they go bankrupt, the California Insurance Guarantee Association steps in to pay claims up to certain limits. Now, a non-emitted carrier, also called a surplus lines insurer, operates outside those state licensing rules, and they have more flexibility in pricing and coverage, which means they can insure properties that emitted carriers wouldn't touch. But there's no guarantee fund protection, so if they fail financially, unpaid claims are your responsibility. So think of it like this. Emitted is safer, more regulated, but less flexible. Non-emitted is flexible, can take high-risk cases, but more personal risk if something happens to the company. Now, before we go a little bit further into the emitted versus non-emitted carriers, let's talk about the California Fair Plan, because really this has been California's insurance of last resort, but really it truthfully feels like the only policy happening right now. The California Fair Plan is designed to make sure everyone can get at least fire coverage, even if no one else will insure them. It covers fire, smoke, and fire suppression, and that's it. Unless you buy a separate wraparound policy for theft, liability, water damage, and so on, which I will say for all my buyers, when there is California Fair Plan, there will always be a wraparound policy with it. For the wraparound policy, coverage limits are usually capped at about $3 million. The Fair Plan is stable for now, but after the LA fires earlier this year, it had to levy a $1 billion assessment on emitted carriers to stay solvent. It's not taxpayer backed. Its strength depends on the emitted insurance market staying healthy. Now, let's talk about what we're seeing here in Redding and the Shasta County, because I will tell you, every buyer that we serve, the first question is, how is the insurance? Now, locally, Farmers Insurance is the main emitted carrier still actively writing new policies besides the Fair Plan. If you can get Farmers, you get broader coverage and the backing of the state guarantee fund. If not, you might be looking at the Fair Plan plus a wraparound policy or a non-emitted carrier like SageSure, Bamboo, or Northern Lights. And I'll say for the non-emitted carriers, I will have buyers choose a non-emitted carrier over a farmer's insurance policy because just the cost of it alone is so much cheaper. Now we'll get into the financial backing. How do you make sure that if you choose a non-emitted carrier that you know that they're financially sound and they're going to pay out their claims. But I will say overall, if the policy can be written, SageSure has become very popular, Bamboo as well as Northern Lights, but SageSure is almost becoming neck and neck with farmers insurance when there's options on the table of, do I go with a farmers insurance policy? Do I go with SageSure? Or, do I really want to go with the Fair Plan? Now, a lot of people always ask, well, how do these people decide whether it's going to be Fair Plan, farmers insurance, or even a non-emitted carrier, and why does it even matter? Well, one of the biggest factors in whether a carrier will write you a policy and how much you'll pay is your home fire score. Now, California uses fire hazard severity zone maps created by CAL FIRE and the Office of the State Fire Marshal. These maps classify areas as moderate hazard, high hazard, very high hazard, and they're based on decades of data about vegetation, terrain, weather patterns, and fire history. And the most recent major update came in this year of 2025. The first since 2007. So these maps look ahead 30 to 50 years, so they're not just about where fires have happened before, but where science predicts they more likely are going to happen in the future. Now, some neighbors will argue when they get that fire score saying, we shouldn't be in a high fire zone, why is this person, why is that person? So I will say that there is some error to those maps. And as those maps came out this year, specifically in our area, I was reading comments of, I'm on a cul-de-sac, I have a fire zone, I am so close to a fire hydrant. Why am I being rated high and my next door neighbor 2 streets down isn't? So I will say the maps do help, but there tends to be this personal opinion of, does the resident agree with it or not? It sometimes can be a little bit challenging as a consumer or even a homeowner looking at those maps and saying, but I'm in the city of Redding, I shouldn't be in a very high fire zone. And unfortunately, how the map zones and rezones itself can put you in a really tricky spot of then how the insurance policy looks at your specific area and address. Now, to back up why this all matters for insurance, emitted carriers like farmers tend to write more in the moderate zones, some high zones if you have strong mitigations, but often won't touch very high zones without significant protections. The Fair Plan is where you end up if your property is in a high or very high zone and no emitted carrier will insure you. Now, talking about non-emitted carriers, they are more likely to step in for you for the very high zones, but for higher premiums and less consumer protection. And these maps aren't static. They're updated roughly every decade when new fire science comes out. And like I said, the public does really try to get involved to express, do I agree or not agree with this map? So if it does change, it could mean that your property's hazard rating has changed, and with it, your insurance options could go up or go down. Now, if you want to check your own property's fire score, you can go to the CAL FIRE Fire Hazard Severity Zone maps online. Enter your address, the link is right here, and you can see in their interactive map whether you are in a moderate, high, or very high zone. Then you can talk to your insurance agent about how that rating affects your options and what mitigation steps could help, reduce that overall policy cost. Now, while I've touched a little bit on the pros and cons of non-emitted carriers, pros again are they will write policies in high or very high wildfire zones, and they can include theft, liability, water damage, and obviously not just fire. They definitely have more flexibility, underwriting, and fast approvals, but the con is that there's no state guarantee if they fail. Premiums can be higher and there's less regulatory oversight. For example, SageSure, like we mentioned, is one of the stronger non-emitted carriers financially, but still lacks state guarantee protection. I will say, when talking to an insurance agent, look up the financial stability of the company. When they make a suggestion of SageSure, Bamboo, Northern Lights, all these things, look at the financial stability, how they pay out their claims, to know if I were to partner with one of these non-emitted carriers as my insurance policy, would I actually be really protected? Now, I'm not gonna lie, if you are new to California, considering moving, insurance is a big deal and ultimately a crisis. To incentivize big carriers to come back, State Farm, Allstate, California is making major reforms under the sustainable insurance strategy. And let me tell you, this is gonna take some time. Now, what they're trying to do is allow forward-looking wildfire models for pricing so premiums reflect actual current and future risk. The second thing is they're requiring insurers to maintain a set share of policies in high-risk areas, up to 85% in some cases, so they just can't pull out. Number 3 is streamlining the rate approval process so insurers can actually adjust pricing faster. Number 4 is permitting statewide rate increases to spread wildfire costs instead of just hammering high-risk zip codes. And number 5 is rewarding wildfire mitigation, home hardening defensibility space within premium costs. These are some of the most aggressive insurance reforms in the country, but change definitely takes time, like I said, and carriers want to see proof that they can operate sustainably before they fully step back in. So here's the short-term look. Even with the reforms, the short-term reality is premiums will keep rising, underwriting will stay tight, fair plan enrollment will probably stay high, and non-emitted carriers will remain critical for many homeowners. Your best move? Know your property's fire score, invest in mitigation, and work with an agent who understands both emitted and non-emitted markets. I can tell you that it does feel like this overwhelming thing of like, can I get insurance? Is it impossible? No, it's not impossible. It's just at what price are you going to pay your home insurance? And that's the balance of figuring out, will I go with a emitted carrier? Will I go with a non-emitted carrier? Or based on where I want to live, my lifestyle, and what I'm trying to accomplish in buying my home, I'm going to be stuck with the California Fair Plan for a while. And so if you are somebody who's going to be moving to our market and considering writing, I always try to get some sort of rough estimate of what the insurance is going to be before we submit that offer. Because truthfully, if the insurance comes back super high and trips your payment to be really elevated, the property may be a 10 out of 10, but that insurance might be the ultimate deal killer for you feeling confident to move forward. And so I always tell people, be prepared as to the properties you're looking at, the things that I come with experience in knowing of how fire scores can trip a higher policy, that being sometimes a green belt. How far are you from a working and operating fire station? Are you in the city limits? Are you outside the city limits? All these little things can, combine to really understanding what that insurance policy number could potentially be. As always, thanks so much for tuning into this week's episode of Rooted in Redding, where we not only help you find a home, but a community to thrive in. If you found this breakdown helpful, hit that subscribe button so you don't miss future updates. And if you're navigating the insurance maze right now, I would love to be a resource and help you understand your options and connect you with the right resources, because I will say, despite the insurance crisis we are feeling here in the state of California, we are still getting our offers accepted, buyer's insurance, and people into homes and a great lifestyle here in Redding. All in all, thanks again for tuning into this week's episode, and we'll see you next week.